Welcome to Crypto News and Investigative Reports. You just saw the trailer of the documentary that we're going to be doing, that we're working on now. So please follow us, Crypto News and Investigative Reports on Twitter. Crypto News and Investigative Reports, our handle is RobTech, ROBTECH, RobTech P. Crypto News and Investigative Reports, RobTech P. Please also subscribe. Just hit that button and that subscription button, as well as hit that bell. There's a bell there. Hit the bell there, and that way you'll be alerted every time we have a video that's coming up. Thank you for joining us today. Got a couple of things that I want to talk about in conjunction to our last video that we put up. I still want to try to keep us abreast of what's going on regarding virtual currencies and banking. Banking is taking on a whole new challenge. I should call it a challenge. And they need to pay more attention, be more engaged, take the lead for this challenge. Now, I'll start by saying Brad Garlinghouse said that Ripple, the digital asset XRP, it's for banks, and it was designed for banking. And so we're waiting for these banks and banking, especially in the United States, to take off. We saw a lot of money providers, your colleagues, your Mercury FX, your Western Union, those type of payment platforms. But banks are still dragging their feet when it comes to virtual currencies. And let me start by by Mr. Weber here. Mr. Excuse me. What scares me the most, and let's start with this article here. So what scares me the most, business leaders in Davos are worried about central banks. And I want to say that central banks are dragging their feet. We're waiting for banking to really take the head and take the lead and start using these virtual currencies. Of course, Brad Garlinghouse talked about how much banks can save on their Vostro accounts. I was doing some research earlier to see what banks is actually saving on Vostro accounts. I haven't been able to validate very much of that information at all yet, but I would like to know that. There's a bank that I'm particularly watching, and I don't see any information yet regarding the savings of their Vostro accounts. But I want you to hear Mr. Weber. He's pretty frustrated about central banks dragging their feet. They're not doing anything. They know that there is a predicted coming financial crisis in 2020 is on the way, and Mr. Weber wants to know what in the world is going on with these central banks. That's what scares me the most. The business and leaders in Davos are saying, what in the world is going on with the central banks? Why are they mum? Why are they absent? Why don't we hear anything from them? Davos, Switzerland, CNN Business. Business leaders in Davos aren't thrilled about the global economic slowdown, but they're even more worried about central banks right here. But they are even more worried about how central banks will respond. What scares me the most long term is that we have limitations to monetary policy, which is our most vulnerable tool. Which is our most valuable tool. Ray Dalio, the billionaire founder of a hedge fund, Bridgewater Associates, said Tuesday at the World Economic Forum. And so they're pretty frustrated. Central banks took a dynamic and unusual steps to prevent economic collapse in 2008. Financial crisis, which they won't be able to do what they did in the 2008 financial crisis. They won't be able to do that again. 2008, a decade later, most of the world's big central banks are only just starting to reverse those moves, limiting their ability to respond to the new downturn. Interest rates remain historically low levels, giving central banks little room to make new cuts. Now the economy is softening, and it's probably too late to get interest rates much higher. The only bank that has any room to maneuver is actually the United States, the Federal Reserve, said Alex Weber, chairman of the Swiss bank UBS. I'll scroll down a little bit. I do want you to hear what Alex has to say. He's pretty fed up. He says the Federal Reserve raised interest rates 4 times in 2018, but its benchmark rate, currently set between 2.25 to 2.5%, is very low by past standards. The European Central Bank and the Bank of Japan are even worse off. The European Central Bank key lending rate is 0%, while its deposit rate is a negative 0.4%. In Japan, short-term rates have been in negative territory since 2016, guys. This is not very good news here, guys. I think central banks are on hold. That's what he says right here. I think central banks are on hold. And I think that's a very important statement right there, because central banks, they're like the nation's banks. They're the ones that are supposed to be carrying the whole financial system. They're the ones they're the ones that banking is supposed to be able to depend upon, because they're the ones that print the fiat. And the math problem always is going to be how to connect the fiat to the virtual currency. That's a math problem that banks, central banks, commercial banks are all trying to figure out that problem. I think central banks are on hold. Weber said the downside is that the European Central Bank will never leave negative territory if they don't start raising their interest rates, and they can't do that. Another issue is that central banks still hold significant amount of debt. Look at that, guys. So that's why your XRP is not moving. That's why it's not moving, because no central banks, for this matter, especially no commercial banks in the United States is using XRP, and no central banks are using XRP. And XRP is made for banking, and central banks hold all the cards regards to banking. All right? It says, and another issue is that the central banks still hold a significant amount of debt. The Federal Reserve has started to unload some of the bonds it bought to long-term borrowing cost. Central banks in Europe and Japan haven't started this process. So it's not very good news that's happening right now for central banks. But this is Davos. This is Mr. Weber. He's over the Swiss bank. He's pretty pissed off. Let's take a listen to what he has to say.
Move to the enterprise-grade cloud that's built to handle all your apps. The IBM Cloud, the cloud for smarter business.
Okay, sorry guys. Had to go through a commercial.
Rates for at least for the better half of the last 5 years have been too low for the environment, for the economic environment we've been in. But of course, Ray mentioned the other point that central banks waited very long time with keeping rates low because they were not gearing monetary policy towards the expected state of the economy and to the rebound of growth, but they were in a kind of insurance policy where they wanted to mitigate any tail risk and therefore kept rates longer just to eliminate tail risk to the economy. And of course, when they started lifting rates, they tightened rates in a late cycle stage. So the impact of that is that if you look at monetary policy easing, which is, if you look at the room to maneuver, the only central bank that has any room to maneuver is actually the Federal Reserve. If you look at traditional policy moves by the Fed, they lower rate very frequently at relatively large steps of 50 basis points. The Fed can do a number of interest rate steps down if need be. So I'm not worried about room to maneuver short term, but as Ray also said, given that we've had so low rates for long, the market hasn't really priced in much higher rates. If anything, the Fed has come towards neutral. They're not quite at neutral, but they're close to it. And so going back down is an emergency measure they can take. But I think it's more likely, if you look at the year ahead, that they're on pause now. I think we're going through a soft spot in the economy. Numbers have weakened, both in emerging markets and in developed markets over the certainly the fourth quarter. We'll probably see a soft spot continuing into the first quarter of this year. And then after the middle of the year, we have some hope that, that soft spot might be behind us.
All right, so you kind of heard what he had to say. he kind of said that he hopes. Um, he said that the economy is going through what they call a soft spot. Central banks are holding it up. They're not doing anything.
So they say that AI is the building
Oh,
block.
hold on. Sorry.
So they say that AI is the.
All right. So that's the big problem. The big problem is that central banks are not doing anything. And he's mentioned that we're going basically through a soft spot right now. And then he said, not only are we going through a soft spot, but he also said that he's like hoping that in the middle of 2019 that things are going to pick up, and it doesn't really look like that. But he's saying that he's hopeful that in 2019 that it'll pick up. He's also saying that the only people that have wiggle room right now is the Federal Reserve, and that's something new because that kind of brings in a whole nother conversation about reserve currency and why U.S. holds reserve currency, and that kind of a conversation. But the way I want to move my conversation today is that their central banks need to pick up and start using virtual currency. And if they pick up and start using virtual currency, then they'll have some movement, but central banks are just, like he said, they're pausing. They're not doing anything. And so since nobody's doing anything, it's causing a serious slowdown. With that being said, let me move to this to this other. No, not there. I don't want to go there. I want to go here. Look how far off from that particular conversation. We'll jump to this J.P. Morgan conversation, and look how far off this J.P. Morgan conversation is. It says Bitcoin will only make sense in some kind of a dystopian scenario. I didn't even really know what that word was, guys, to be honest with you, when I saw this article. And I began to read this article and dig into it because I'm thinking, this is one of the main commercial banks in America, J.P. Morgan Chase, all over the world, actually. And a bank like this, making a move to virtual currency will kickstart some virtual currency. We'll really have some things going. People can get excited about it again. Virtual currency, especially XRP and some of these cryptocurrencies will start moving again. But no, they're saying it's got to be, in order for Bitcoin would only make sense in a dystopian. Somebody can help me, correct me on this later. Dystopian scenario. And so I didn't actually know what that scenario looked like. And I got a picture. That scenario looks like this. A dystopian future. It looked toe up, man. So JP Morgan is saying it has to look this crazy, right? Only that Bitcoin would only make sense in this kind of a scenario, guys. And then they even go so far as to say, it might not even work in this scenario because there might be other things that they can do. So this is how far off banks are, really. Banks are not really engaging in using virtual currencies, guys. There's some hurdles that banks need to get over before they dive into virtual currencies. And then, to be quite honest with you, virtual currencies is kind of antithetical to banking anyway. Banking doesn't seem all that excited about virtual currencies anyway. Banking seems to have problems with virtual currencies because banks want to lend everybody the same $100. Banks want to keep everything that they do private. Banks don't want everybody to know what they're doing. Banks does not want everything on the public ledger. So that's the problem with banks. They're having a serious problem. I want to get into this article. Is the banking system a fraud? Please bear with me. There's one more thing that I do want to show you that I was not able. A friend of mine sent to me that I want to take an opportunity to show you regarding a shout out to my friend One World Evolution. He shot me this form and I forgot about this, and this is breaking the taboo on private Ripple ledgers. And this document right here talks about banks not even wanting their information to be shown. And Ripple actually knew that back in 2013 that there were going to be. There's a lot of private ledgers, but there's only one Ripple XRP ledger. But there's a whole bunch of different types of private ledgers. And on this this document right here, it kind of lets you know that banks do not really want their financial information to be on a ledger. I'll start right here. I'll start reading right here. It says financial institutions who aren't asking for privacy yet will be asking for privacy eventually. It says, although some banks may have seen, let me highlight it so it's easier for me to read. It says, although some banks may have seen more open-minded although some banks may seem more open-minded than others about openness and transactions, there is a very large gap between the current understanding of the issue at trial stage and what local and global regulations and laws require in terms of bank secrecy and customer information protection. See, now, I want to pause there just for a minute because banks doesn't want their information on a ledger. Banks primarily want to keep their information locked up. They want to keep it secret because, like I said, banks like to lend you the same $100 that they lend me. And they lend every person the same $100, charge interest on that, and then that's how banks make their money. So they want to keep what they do, banks secrecy and customer information protection. At this point in time, it is still very unclear if banks would be legally able to perform transaction in the open on behalf of their customers. See that? So let me continue to read. Now add to that some banks are pushing the vendors and their R&D departments for private ledgers and getting their way, and you arrive in that situation where banks will be able to get the best out of the distributed ledger technology without having to transact on a public network. So I wanted to read that from this Ripple document that was sent to me from my friend One World Evolution, that this is the problem. The problem is banks are dragging their feet because they are clearly antithetical to opening up their transactions for everyone to see their transactions. And this document was back Saturday, April 20th, 2013 at 12:11 p.m. So this is an old Ripple form document. There's more. There's like, this is page 1 of 3. This goes on and on and on, but I'm not going to go through the whole document. I'm going to go through this document at another time, this Ripple document at another time. So they were already knowing that banks were looking for privacy and they did not want everything out in the open. Let me see. It is becoming increasingly clear that banks do not wish to have all their internal transactions published on an open network. In the last couple of months, there have been an avalanche of news and highlights, trends such as ABN and ING working on a private fork for Ripple, and for IBM entering the market for private distributed ledger technology, on startups such as TMBUS, I think it's pronounced Timbus, offering tailor-made Ripple forks, and that's only for Ripple. Other distributed exchange technologies have already smelled that trend and started to alter their trajectory to align with central banks and big business wishes for control and transaction privately. So I have this document in my hopefully, if I don't forget, I'll put it in the at the end of this video. But anyway, the point here is that the problem is banks are dragging their feet. And they know that if they go ahead and start working with Ripple and the digital asset XRP, they could start moving faster. But you can see they don't want it. They don't, because they don't want their information out there, because this is an excellent article right here. And in my investigation in banking, it says, is the banking system a fraud? Let me move to this article, because that other article, we can go on and on with that. But is the banking system a fraud? And you've worked your this is just amazing. I'll read this to get you caught up to speed here. It says, you've worked the entire 4 weeks until your bones are dry from fatigue. You spent sleepless nights working on a project or an assignment, and even worked your body to an unhealthy degree. And at the end of it all, however, you have a paycheck in your hand and you finally have a wage. Or do you really? And this goes on to talk about how banks are scamming. This best way I could put it is that banks don't really have the money that they say they have. Banks are waiting actually for you to come into the bank and deposit your check in the bank, so banks can use your money to lend to somebody else. I'll read it a little bit more. It says, the bitter fact is that it is not you, but your bank that has received the wage. In our day-to-day lives, we are dependent more than anything on banks for the money that we earn, when it should be the other way around. That is, banks should be depending on us instead of the money that they offer to the world. And when one pays close attention, the entire system appears to be absurd. How can a third party that have no role in the amount of work that we did and efforts that we put have a say in the amount of money we can withdraw and the number of times that we can withdraw it? Have you ever thought about that? They put a limit. You can only withdraw so much of your money and at certain times of the day, because banks really don't have no money and they're using your money to do what they need to do. And it's true, guys. Today we are here to unleash some facts about banking system, which will show you how the whole banking system is a sham. All banks are broke. Frictionless reserve banking. I mean, you can just about understand how all banks are broke. I've already mentioned that to you. They're waiting for you to deposit your money so they can use your money, basically. A frictionless reserve banking is now the biggest fraud that banks can possibly play, is that they go ahead and offer more money than they actually have, and this is primarily known as frictionless reserve banking. This is a very dynamite article. I got to hurry up here because I don't want this to be too long. And then false credit creation, faking it on the credit, trying to, and then I want to get to the central bank. Here we go. The central bank, perhaps the most significant loophole in banking system, in the banking system of the economy, is the central bank and its activities, and the biggest scam that it plays in the printing of money on deficit financing. And and that's the problem, that you're in a deficit and they still be printing money even though that you're in a deficit. And if you looked at my last video, I kind of pointed out a lot of countries that are in just I pointed out the global debt situation. And as you continue to look at the global debt situation, and then you're going to continue to print money on a global debt situation, all you're doing is getting more and more and more in debt. It's like taking on more water when you're drowning. All right. Whenever the money supply in the economy is falling, banks resort to deficit financing and print more money. But the actual amount of goods and services in the economy, remain the same. So although now, instead of $100, you have $200 that you cannot get, and you cannot get an extra bag of rice because the total production was not increased and only the paper money was. And so, the whole point here, guys, is that banks, especially central banks, They have nowhere to go. Their best turn is to turn to virtual currencies and start working with something like the digital asset XRP, especially central banks, because they're really sincerely dragging their feet. And so they need to go ahead and start working with the digital asset XRP. All right. And so just to recap here, I talked about how antithetical banks are to private ledgers, to open ledgers. They want private ledgers. They want their own private ledgers. And this came from a Ripple Forum document back in 2013. And the other thing I talked about was how in Davos, how they're pretty upset about how virtual currency, not virtual currency, but central banks. What scares me the most, business leaders in Davos are worried about central banks. And I talked about the scam of how central banks, and even they're even talking about it in Davos. And then I talked about even commercial banks like JP Morgan, their bank. They're really not interested. And from this article, you can tell they're really not interested in virtual currency either. I mean, this is about Bitcoin. But look, if they want you to get to here before they even start, start taking on the deal, because JP Morgan knows that a financial crisis is coming and they want to get here before they start doing anything. They're saying, look, virtual currency, Bitcoin would only make sense in a crazy scenario like this. That's pretty crazy. And then I kind of went over this article with you a little bit about, is the banking system a fraud? Look, I want you to follow me on YouTube, and please click that button there on YouTube, subscribe, and also please hit the bell. I want to get our numbers up because we're working on some great banking information. We're going to be working on the way banks are changing and what they're doing. This is pretty cool right here. And so please follow us on Twitter. We're Crypto News and Investigative Reports at RobTech, RobTech, RobTech P. We are doing the video on, we're doing a documentary on banking and the changing and the way banks are changing, how virtual currency is disrupting banking altogether. Blockchain is disrupting banking altogether. All right? Until the next time, people. You guys have a good day, or wherever you are. If it's nighttime, have a good night. We'll talk to you real soon. Thank you.